Hi there, and welcome to today's weekly market update. I'm gonna date it actually May 16, 2022. Please note that these videos are for educational purposes only, not to be taken for advice. Trading and investing in general is risky, so don't trade or invest if you cannot afford to lose. Past performance is not indicative of future results, and if you need to know more, please visit our website at www.estetrader.com. I know that last week I was away and had a really good experience training actually from a different academy, but nevertheless, now that I'm back, I'm going to discuss more in terms of what really also happened last week. Last week, despite me being away, I was monitoring the markets as well, and there were a lot of volatility, especially in the crypto world. So if we look here on the S&P 500 based on the weekly time frame, the S&P actually dropped almost to the 38.2, actually not, beg your pardon, not 38 point, yeah, sorry, 38.2 percentile, which is a lot of area of demand, which is a good area of demand right here. The low of last week was 3859.78 according to this chart anyway. And since the neckline actually broke out over here, I'm forecasting for the S&P to go to the 50th percentile sometime in the future after a minor correction is going to happen to around 3,500, somewhere around here. And it could also go to around 3,400 right there as a form of a minor correction. But nevertheless, for the past 1, 2, 3, 4, 5, 6, 7, 2, 4, 6, yeah, 7 weeks in a row, the market actually hasn't corrected as yet. And since price is also at a good demand area at this point in time, there could be a probability or a higher probability that the S&P is also going to correct itself to the upside. Mind you too, though, that interest rates are still in play. I believe there's more to come. And that being said, then the dollar index also has room in order for it to head back up. So it created new highs last week and it topped 105.005, created a new high since 2020 and also created a new high since 2017. So if you can see through there, January 2017. If this is going to pursue even further, I believe that it is going to go, if I go through here, let me just move my screen here for 1 second. Click to auto right there. Around 117 to around 118, back to the areas of early 2000s, late 1990, early 2000s, 2001. Somewhere here within the area of supply. So that is my forecast. For longer term, I'm very bullish with the dollar index for longer term. But of course, in between, there's going to be some form of a correction before it can continue to go to the upside. So, but if you notice, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So a year, almost a year of it very bullish. And it hasn't corrected as yet. Now that it created and broke out within the level of supply, it has to stabilize at one point and then correction before a continuation over there. And looking at the volatility index, which is the inverse relation with the S&P, and if you can notice here too, it was very bullish last month, currently stabilizing itself weekly. 3 in a row, filling that gap, and odds and probability from a minor correction, continuation to go to the upside. So at this point in time, there is some form of divergence with the S&P 500 at this point. So notice it's down 3%. Technically, the S&P should be up to the upside. So the question is now why? And there is going to have one of them either will lag and one of them will lead. So technically the S&P 500 should be over here. So odds of probability that it can head towards around 40 to 50, back around there, is more than likely. But first is this strong supply area, which is also an equilibrium from the bottom to the top over there. Okay, so that's within the S&P and the volatility index. There is some form of divergence. So the dollar, sorry, volatility index and the S&P and the dollar index. And if you notice here on the dollar index, also stabilizing itself, minor correction before it can continue. And what I'm looking for is a lower high before it can break further to the downside. Oil has been coming back up after a rebound within the area of demand here at about $100 a barrel. Weekly time frame, you can see they're breaking out, and if no one will top at 117, this is also going to fail further to the downside. So that's for both US oil and the Brent crude oil. Stability, more than likely they will also drop, is more than likely to happen in terms of probability. Currently the level of supply at this point, since it's a higher low, then the next one should be a higher high. So, but if they're not willing to do that, then this is going to fail. All right, so that's with oil. Medium longer term, still looking very bullish, but there's going to be some form of a correction. And it's kind of very interesting that if the dollar index, technically, from a theoretical point of view, the US dollar is strong, commodities like oil and gold should be dropping. All right, and looking at copper here, copper is wants to rebound. I believe there is going to be some room in order for this to rebound a little bit back to area demand right there, and back to equilibrium. So demand equilibrium around 449, 450, lower low, and a lower high, another lower high, or higher low than a new higher high. However, some room in order to go to around the 462.5 area on that point of view. All right, and gold. Gold is currently a nice, beautiful hammer on the daily time frame, rebounding from 1,780, 1,790. Somewhere here from good area of demand. Probability from a correctional point of view, a rebound to the upside is more than likely to happen. TYX, I believe they're going to fill in that gap. So there's already a sign of weakness from an interest perspective, from the Treasury bond yield, the 30 Treasury bond yield. Odds and probably this is going to create a new lower low back down to 280, even through here is more than likely to happen, and that will happen. The dollar index also will follow. So currently the yield is leading indicator. All right, let's look at the major currencies against the US dollar, and you can see here based on the Aussie, very similar with copper. It's currently following that. So the odds and probability that it will go to around 70 cents, it's also more than likely to happen with the Australian dollar. So I'm bullish short term. Euro, US dollar, same thing. Around about 105.06 as a form of a minor correction. Still on a downtrend, still very strong. Nothing, there's no change. And here is a very strong demand area within these two price points over there. Pound, and area of demand as well. There's also a lot of room in order for this to head back around that 126.90 area. From a medium time frame, even on the daily, 124, even through all the way to 128, even depending on where it should go. But first area of supply, second 26. So there's some room there from a short-term point of view. Kiwi forming as well a hammer at this point in time. Also a good potential probability go to 64 over 65 and the 50th percent, 38th percentile. Only if it chooses to break through a particular trend line. So let me include this actually right there. Perhaps open for breakout and 38.2, 50 percentile. Only if that happens, of course. Dollar CAD chose to correct once again after it hit 131 right there. And let me get rid of this. High at 130.76. on a daily time frame, weekly time frame, looking nice. You have a gravestone doji. Odds and probability from a gravestone doji is to create a new higher low somewhere before it can continue to go to the upside once again. All right, so bearish with the dollar CAD short term to medium term as a form of a correction, and then more continuation of the dollar CAD some or sometime in the long run. Dollar Swiss is the same thing. Dollar Swiss is very strong. Excuse me. There 1, 2, 3, 4, 5, 6 weeks of very bullish, especially a breakout. And now odds and probability that it also could correct is more than likely to happen. Monthly time frame, very powerful, very strong, already approaching supply 101 since actually 2019. 2019. Okay. Dollar yen. Dollar yen is also odds and probability from a correction point of view is also more than likely to happen. That's around 123, somewhere around there. So I'm bearish with the dollar yen short term as a form of correction, bullish longer term. And you have here currently new lower low, lower high, odds and probability it will correct. It's more than likely to happen. All right, so that is from majors against the yen. Let me have a look quickly on Bitcoin. Bitcoin didn't want to play out this long wick. They have to fill in that gap. And 130 seems to be a, 30,000 or 30 with 1,500 even seems to 31,400, 31, yeah, 400. It seems to be a good solid supply currently back to the demand area. So it's been very volatile. It has been going up and down. So let's see in the next few days we're in form of stability. Weekly time frame, I mean, it's a good sign. They broke out 30,000, but mainly here at 29, especially these three lows right here. 30,000, 28.6, and 29,296. Lower low, higher low, breaking out, currently a new lower low. So minor correction. I believe there's more room in order for this to head back down south around 10,500 somewhere sometime in the long run in terms of a longer term. So short to medium term, I'm bullish back to around 37, and then continuation further to the downside if it didn't want to play. All right, so just be aware with cryptos currently very volatile, and there is definitely more for that to happen. Ethereum, ETC, USD, same. They're all following Bitcoin anyway. All right, so that's my report for today. So if you have any questions, please feel free to email us at contact@esttrader.com or via our Telegram channel if you want to join our Telegram channel for free for more updates as well. Hit the link below. Other than that, hope you enjoyed that. Take care until next time. Happy trading. Bye now.